Have you ever wondered what would happen if the world's most famous digital currency suddenly doubled in value overnight? Or maybe lost half of its worth in a single trading session? This is not just a hypothetical scenario, it is the volatile reality that defines the world of Bitcoin. As we navigate the latter half of 2025, the digital asset stands at a fascinating crossroads, pulled between the forces of institutional adoption and tightening regulatory scrutiny. The question on every investor's mind, from the seasoned trader to the curious newcomer, is deceptively simple, yet profoundly complex. Where is Bitcoin headed next? The answer could redefine personal fortunes and reshape the very fabric of our financial systems for decades to come. Before we dive deep into the analysis, the predictions, and the hard data that will paint a clearer picture of Bitcoin's potential future, I want to offer you a direct way to be a part of this digital revolution. For a limited time, I am giving away $100 in crypto to 5 lucky subscribers. All you need to do is subscribe to the newsletter for a chance to win and to receive these kinds of in-depth analyses directly in your inbox. So let's get started and break down exactly what you need to know about Bitcoin's next big move. As of today, September 1st, 2025, the price of Bitcoin is hovering around the $125,000 mark. This level represents a significant psychological and technical milestone for the asset, following a period of sustained consolidation throughout the summer months. After reaching an all-time high of nearly $150,000 earlier in the year, the market experienced a healthy correction, shaking out over-leveraged positions and establishing a new floor of support. This price action is critical because it demonstrates a newfound maturity in the market. Unlike previous cycles characterized by extreme parabolic rises and devastating crashes, the current trend suggests a more measured and sustainable growth trajectory, which is incredibly encouraging for long-term holders. Analyzing the recent price movement reveals a battle between bullish and bearish sentiment. The bulls point to the strong support found above the $110,000 level as evidence that institutional buyers are stepping in to accumulate during dips, preventing a more severe downturn. On the other hand, the bears argue that the failure to reclaim the $150,000 peak indicates potential market exhaustion. Trading volumes have been moderate, suggesting that many investors are in a wait-and-see mode, anticipating a significant catalyst to push the price in a definitive direction. When we turn to the experts for their predictions on Bitcoin's future, a consensus, while not uniform, leans towards cautious optimism. Analysts from major investment banks like Goldman Sachs, JP Morgan, have updated long-term targets, many citing $200,000 to $250,000 per Bitcoin by the end of 2026. However, not all forecasts are so bullish. Some prominent economists remain skeptical, pointing to the persistent volatility and the ongoing regulatory pressures as major headwinds. These experts often highlight environmental concerns related to Bitcoin mining and the potential for government crackdowns. A particularly interesting forecast comes from Kathy Wood of ARK Invest, a longtime Bitcoin proponent. Her firm's latest research report doubles down on their highly ambitious long-term target, projecting a price of over $1 million per Bitcoin by 2030. This prediction is predicated on Bitcoin capturing a significant share of the global store of value market, becoming a primary settlement network for international transactions, and playing a key role in the emerging Web3 economy. The regulatory landscape for Bitcoin remains one of the most critical and unpredictable factors influencing its future. In the United States, the conversation has shifted dramatically over the past year. The Securities and Exchange Commission, the SEC, the Commodity Futures Trading Commission, the CFTC. Regulators are no longer debating whether to regulate crypto, but how. Recent legislative proposals aim to create a clear framework for digital assets. One key piece of news: the Digital Asset Market Structure Act. It seeks to assign regulatory authority to the CFTC for commodities like Bitcoin. The industry largely sees this as favorable. The CFTC is viewed as more innovation-friendly than the SEC. On the international front, the picture is a mosaic of different approaches. The European Union has moved forward with MiCA. MiCA provides a comprehensive, unified legal framework across member states. That stability has attracted investment and talent to Europe. In contrast, some nations in Asia have adopted a more stringent stance. Japan has established clear licensing regimes. South Korea has also set clear licensing rules. Other countries in the region still enforce strict controls or outright bans. That creates a fragmented regulatory map, challenges and opportunities for the global market. Beyond the trading charts and regulatory debates, Bitcoin's real-world adoption continues to grow at a steady pace, solidifying its utility beyond a purely speculative asset. One of the most significant trends is its increasing use as a remittance tool. In many parts of the world, sending money across borders is a slow and expensive process, with intermediary banks charging exorbitant fees. Bitcoin, through networks like the Lightning Network, allows for near-instantaneous, low-cost international transfers. Migrant workers in North America and Europe are increasingly using Bitcoin-based services to send money home to their families in Latin America, Africa, Southeast Asia, saving billions of dollars in collective fees and putting more money directly into the hands of those who need it most. Another major area of adoption is in countries experiencing high inflation and economic instability. For citizens in nations like Argentina, Turkey, Nigeria, where local currencies are rapidly losing their purchasing power, Bitcoin has become a vital tool for wealth preservation. In the corporate world, adoption is also becoming more mainstream. The Lightning Network, a Layer 2 scaling solution built on top of Bitcoin, has been a game-changer for microtransactions and everyday commerce. By enabling faster and cheaper payments, it has made buying a cup of coffee. To fully grasp Bitcoin's current market dynamics, we must look back at the most recent halving event, which occurred in the spring of 2024. The halving is a pre-programmed event in Bitcoin's code that happens approximately every 4 years, cutting the reward for mining new blocks in half. This effectively reduces the rate at which new Bitcoins are created, making the asset scarcer over time. The 2024 halving reduced the block reward from 6.25 BTC to 3.125 BTC. Historically, the year following a halving has been characterized by significant price appreciation, and the market behavior we have seen throughout 2025 is largely consistent with this established pattern. The halving creates a supply shock. With fewer new Bitcoins entering the market each day, even a constant level of demand will naturally exert upward pressure on the price. When demand is increasing, as it has been with the launch of spot ETFs and growing institutional interest, as we've explored, the price is currently consolidating around the significant $125,000 level, reflecting a market that is cautiously optimistic but awaiting a clear catalyst. The key takeaway is that the fundamental drivers supporting Bitcoin's value proposition appear to be strengthening over time. The regulatory news is arguably the most important factor to watch. In summary, Bitcoin stands at a pivotal moment. To ensure you never miss critical updates like these, I highly encourage you to subscribe to the newsletter. As a reminder, you will also be entered for a chance to win $100 in crypto, giving you a perfect start. Now that you have a better understanding of Bitcoin, a great next step would be to explore the world of Ethereum. Stay informed, stay curious, and I'll see you in the next one.